On All About Stocks this week, the market hits another all-time high on Friday. What should your investment strategy be? Kotak and ING Vysya merge. What does this mean for the banking sector and for the stocks of those two banks? And G. Chokalingam tells you why you should be investing in MOIL for the long term. Welcome to All About Stocks. Thank you so much for tuning in. We've had another very big merger in our banking sector, drove up the entire bank index, and of course our market hit another all-time high on Friday before closing. This of course brings us to ask the question, is it the right time to get into the market at this point? Is it too expensive to buy? Will we have opportunities or corrections between now and the budget in February next year? We'll answer all of those questions and the other questions you sent in during the week. Remember, if you have anything to ask us at all about your stocks, our email ID is at the bottom of your screen. You'll find us on Facebook and you can find me personally on Twitter. It'll be my pleasure to hear from you. Let me first bring in my colleague Ajay, who'll give us an update on all of the action this week. Ajay, take us through the run-up when we finally hit that high.
Well, Faye, it was another amazing and very profitable week for the Indian equities. We've gained about 1% on the benchmark indices. The Bank Nifty is in a tear-away rally, hitting fresh 52-week highs. And this particular week belonged to the large caps. The small caps were actually seen languishing in trade and massively underperformed the large caps. Signs that it's the institutional money which is riding on the markets right now. The other best performing area of the market this week was capital goods. Real estate was the only worst performer in the entire week, but other than that, look at autos, look at consumer durable. Almost every sector has gained a whole lot as fresh positions are lining up. But it was not that easy. If on a net basis, it may look like a gain, but during the week, it was extremely volatile. On days, it looked like markets are collapsing and panicking, but on a net, we actually gained this particular week as well. Institutional flows this particular week were pretty patchy. There were days when FIs were actually seen selling. DII support was also lacking, but at least on the index futures, FIs are seen buyers, and that is actually supporting the market a whole lot. Traders believe that it remains a buy on dips market right now. Going forward, they believe that the recently announced Chinese stimuli would also be a very big source of liquidity for the global equities. Emerging markets like India would benefit. Going forward, it's the start of the winter session of the parliament, which traders are eyeing very closely, and of course the week after is the RBI policy. So a lot of macro cues and global cues will play on the mind of the trader. It was overall a pretty positive and profitable week for Indian equities.
Well, Ajay, obviously I want you to brief our viewers about the big merger between Kotak and ING Vysya. Take us through the numbers of that merger as well.
Well, ETNO was the first one to break this particular mega deal in the banking space, and the official announcement saw both the Kotak Bank stock as well as the ING Bank stock made fresh 52-week highs. So it's a pretty huge deal, making about 1 lakh crore kind of a combined entity valuations. A merger in the banking space has not been seen for years, ever since HDFC Bank took over the Centurion Bank. And also, if you look at the specifics of the deal, Kotak Bank will actually benefit as far as the distribution of ING Vysya Bank is concerned. The combined entity will have around 1,200 plus branches across the city, and it's a win. The trader community is looking at it as a win-win situation for both the bank shareholders. However, the return on asset or return ratios for the combined entity would be slightly lower compared to the individual return ratios of Kotak and ING. But going forward in a 1 to 2 year gap, those are expected to catch up. So overall, the analyst community is pretty positive on this particular merger, but surely it was the biggest newsmaker of the week.
All right, Ajay, thank you so much for that update. Joining us today in the studio, G. Chokalingam, the founder of Economics Research. Chokha, thank you so much for coming in. Very interesting move there with Kotak. Tell us what this means for people who are holding Kotak shares at this point. In the longish term of, say, 3 or 4 years, what would it mean to my Kotak Bank share that I'm holding in my portfolio?
Certainly. I mean, if you're having a view for 3 to 4 years, definitely the stock should give annualized return of 15% per annum, assuming that, the market is quite stable. I mean, there are no major serious concern from the global front. Because it's a smart move, you get almost 80,000 crore of business overnight. And secondly, ING definitely infused certain technology in this bank ever since they started with a 10% stake, then increased to 40. So over a period of time, they infused a lot of technological, innovative technologies inside the bank. So that will be beneficiary. Third, the most important point is that it's actually a old private sector bank, till ING took over. And it has got a credible business in South India, particularly from the business community. And whereas Kotak doesn't have that kind of presence in South India. So it gives you overnight, substantial all India presence. So all these are positives. Therefore, in 3 years time frame, it should create a lot more wealth for the investors.
What about for the investors who are holding the ING Vysya stock at this point?
I think at last week price, it is little discount. So they should hold on to the stock and try to get converted into Kotak Bank shares.
So in terms of a pecking order, tell us where this bank falls among all of the banking stocks. If I were to ask you to give it priority for a portfolio, where would you place it?
I would right now place it on 4th or 5th rank. You have Axis Bank, you have HDFC Bank, then Yes Bank and ICICI. So it would be 5th in terms of size. But if you look at the opportunities going forward, because of national presence and ING support, of course, ING may not have solid support because right now it is only single-digit stake in the bank. But definitely, kind of management efficiency the Kotak Bank has, I see that in 3 to 5 years, it is going to 3rd rank. It can easily, outperform ICICI Bank, to some extent even Yes Bank. So therefore, I firmly believe that, after HDFC Bank and Axis Bank, this can become a 3rd in 3 to 5 years.
All right, very quick question. I want to ask you this very quickly. We heard Uday Kotak at the press conference yesterday. He mentioned the fact that the combined entity has a foreign shareholding right now, combined, of about 46%. He mentioned very cheekily that there is plenty of room right now for global institutes to come in and get involved. Now, if they do manage to attract that kind of foreign investment, what will it mean for the Indian investor?
A lot more wealth. I mean, see, the one advantage Indian retail investors have is they have to find out at the right time and buy at a small cap. Even the Vysya Bank, you would be shocked. In 90s, it had a market cap of hardly few 100 crore rupees. So I know a couple of investors who still hold on to the stock. So it means that definitely a lot more wealth because the foreigners like, larger the size, they have more interest. Larger the market cap, they like it. So we have seen, continuous inflow chasing, irrespective of fact whether the stock has already run up 10 times or 20 times. So definitely it's a good opportunity for investors in India. All
right, good opportunity to get in at this point if I have a 3 or 4 year horizon.
Definitely, but then always, whether it is Kotak Bank or any stock, don't rush, when the story is out and the stock flares up. So wait for some correction in the market or stocks. You always get that kind of opportunity. That time you enter.
All right, this is my next question then. Between now and the fact that there's normally a Christmas rally, there's a Thanksgiving is around the corner, that means a great deal for consumerism in the US, then there's the Christmas rally, then there's New Year, then there's the pre-budget rally in India. Do you expect corrections around, along the way where Indian investors can get into the Indian market?
I continue to believe in a structural bull run story, but certainly by either December end or Jan end, I expect 3 to 5% correction in the market. Because after 2007, this is the first time FIs are making phenomenal money in the market. The last 3-4 years, while DIs were continuously selling, it was only FI who were continuously buying. So they are sitting on a huge potential gain. So we know, whenever such gains happen, a lot of fund managers, book profit and enjoy higher bonus and good holidays. So that possibility is there. So tactically, it can fall 3 to 5%, either by December or by January.
Would you recommend that if we were getting in, we should be focusing then on consumer stocks and stocks like auto? Or should we stay with the usual IT and the pharma and the themes that have stayed with us for this work?
I would have tilt towards our pharma and IT till March end, because we have seen yesterday, rupee falling 9-month low. I firmly believe that, before March 31st, rupee would fall once again significantly because, we need to repay, $174 billion of external debt. We have to roll over before March 31st. That's going to apply a lot more pressure. And we have seen in the month of October, gold import, almost going up by 4 times. If you analyze it, it's a mind-boggling figure. So India doesn't have that kind of, dollars reserves. So there will be a lot of pressure on the rupee in the short term itself. So that should favor, again, IT stocks and pharma stocks, at least for next 4 months.
All right. Can you give us 2 picks in each sector for now?
It depends upon the investor profile. If investors are very defensive, they want to have long-term focus, then obviously stock like Lupin. But if people can take 5-10% downside risk, but they are looking for multi-bagger, I would recommend a Claris Life Sciences.
All right. And same question for the IT sector?
IT, I would, we already covered once and we came out also in the same show, Sasken Communication. After going to 350, it has come down to now 255, 56 level. The cash itself is 62% of the market cap. The CEO exited the company, the stock crashed. But I firmly believe that, these are all an opportunity. Even Infosys had a problem, and Infosys at some point in time became untouchable for many, but the same Infosys is now outperformed. Because India has got talent in IT space, which is visible in, if you take Google or any top IT company in the world, there are a lot of Indians rocking. So Sasken should not find it difficult to attract, and it would attract. And the day they appoint and, again, he gives press conferences, then again you would see the stock going up.
All right, so those are Choka's recommendations. Remember, he did say there will be opportunities to get into the market between now and January. We need to watch out for those opportunities. Choka, I want to very quickly answer some questions. Uzma has written in, she has 2,000 shares of Gujarat NRE, Coke bought at 18 rupees. Should I hold on to that stock? The stock ended the week round about 7 rupees. What's your recommendation on this stock?
I mean, it is very painful for the investor. Should sell the stock because debt is more than 3 times the sales, and it's making huge losses, more than 500 crore last year, and again in the first half also made losses. Should sell and buy, a safe stock like a KCP Sugar. Of course, I might look contra, sugar is not doing well, but this is one of the few best sugar companies in the country. Even in the most stressful time, the company is making profits and giving good dividend. I am sure, maybe in 6 months or 18 months, there will be a major rally in the sugar stock. So the investor can try to, compensate the loss in the Gujarat NRE Coke.
All right, let's quickly take another question. Biplab has written in, he has 50 shares of M&M Financial, which he bought at 261 rupees. Should I hold on to that stock? The stock ended the week at a little over 300. That's on your screen right now. Choka, hold on to M&M Financial?
Certainly. I mean, it's fantastic management and would definitely do well further.
All right, so hold on to that stock as well. Now, if you're looking for advice on an entire portfolio, here is a portfolio that Choka designed for us on the 8th of August 2013. We've been tracking it ever since. Now get this, it's at an overall gain of 91.5%. The Nifty over the same period is up 52%. So we've done really well to outperform the Nifty. Choka, thank you for the recommendations. Let me give you a list of the stocks in this portfolio. There's ITC, Infosys, RIL, International Paper Corp, Claris Life Sciences, Navegli Lignite, Bombay Burma, Emphasis, Karur Vysya Bank, Bama Lorry, Moil, Biocon, KCP Sugar. Well, some of these stocks have done remarkably well since we bought it. Do you want to make any changes right now?
No, I would like to retain almost all except replacing Infosys with Wipro.
Why is that?
Because now Wipro is cheaper than Infosys. And in fact, Infosys was underperformer about 8 months ago. What I observe in this market is that, either sectoral rotation happens or within sector, the top stocks get rotated. So I'm sure, Wipro would get its own opportunity now. It is one of the cheapest among major IT stocks. And also, if you look at 1 year forward earning, it's just around 14.5 times. Even the smaller IT companies are quoting at 20-25 times. So therefore, I would like to replace Infosys with Wipro.
So this is a strategic move then. It's not particularly to do with the fact that Infosys is not doing badly at all, and there's no reason to replace it in portfolios. For those of our viewers who are watching right now, how many of them should follow your move right now and replace Infosys with Wipro in their portfolios? I
mean, I looked at the fundamentals. I think everybody should. Because, as I said, everybody was apprehensive of Infosys. A lot of people downgraded. And today, because it has run up now, people are upgrading. But stick to the fundas. Definitely, Wipro is much cheaper than Infosys now. So stick to your valuation, comparative valuation table and management of quality. I'm sure Wipro will outperform Infosys going forward.
All right, so we're replacing Infosys by Wipro in Choka's portfolio. I'll give you a list of the stocks as they stand right now. There's ITC, Wipro, RIL, International Paper Corp, Navegli Lignite, Bombay Burma, Emphasis, Karur Vysya Bank, Bama Lorry, Moil, Biocon, KCP Sugar, Claris Life Sciences. So if you have any questions about that portfolio, feel free to write to us. Our email ID is at the bottom of your screen. We're going to take a very quick break, but stay with us because when we come back, we'll take a look at one of Choka's past recommendations and he'll give us a stock that we can buy currently at these levels to add to our long-term portfolios. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Choka is still with us, helping us with our long-term portfolios. And this is why we take his advice so seriously. Choka recommended Bombay Burma on this show on the 30th of May when it was trading at 120 rupees with a 1 year's target of between 200 and 300 rupees. That stock on your screen right now ended the week at 401. It's gone up nearly 4 times, Choka. So first of all, thank you for the recommendation. I'm sure all of our viewers really benefited. But those of us who are holding the stock in our portfolio, should we continue to hold it? Is there more to expect from Bombay Burma?
I think they should hold. Of course, since it's almost gone up by 4 times, there is a correction in the market or profit booking takes place, it can fall 5-10%. But if somebody wants to hold it for 3 to 5 years, from this price also it can more than double. But simple reason is that, it holds 51% stake in Britannia. And even after this run-up, it is still available at, 75% discount to Britannia investment market value. And plus this is the 150th year for Bombay Burma. And so if you look at the Britannia, in the last 3 years, it has grown its net profit at 37% per annum. Now, being FMCG company and assume conservatively only 15% annual growth is there in the profit of Britannia for next 3 to 5 years, Britannia market cap can double. So therefore, if you have 3 year to 5 year view, and even if you assume 40-50% discount to valuation of Britannia held by Bombay Burma, even after 4 to 5 years, still the stock can more than double. So therefore, I would suggest investors to become long-term investors and hold on to stock for 3 to 5 years.
Would you like to give us a fresh target? If you're talking about more than double, can the target be 800 then?
I have given formally 900 rupee target in 3 to 5 years.
All right. So that's a new target on Bombay Burma, 900 rupees in 3 to 5 years. Remember, we started when it was at 120 rupees. Now I've asked Choka, and he's been kind enough to agree to pick one stock for this week, and he's picked Moil. It ended the week at 310 rupees. Now, if you don't know, you're not familiar with this company, it's a mining and mineral company. It's a cash-rich company right now. But the thing that concerns me, Choka, about this is, A, the commodities have not had a great run this year. Moil, in particular, has had to revise its prices downwards between 10 and 5% in the last quarter itself. What's making you comfortable and positive on this stock at this point?
Certainly. It is, I'm really very passionate about the stock. You're right, it's into, metal and mining business. But if you look at the stock, companies, it is basically into manganese ore. And the manganese ore prices have not fallen the way, the iron ore prices have fallen.
Yes.
And secondly, if you look at the balance sheet, just concluded September 30th, it has got a cash of more than 2,800 crore.
But it's had that cash for a while. When is it going to deploy the cash? How is it going to use it? What is the comfort level you're getting from that?
Certainly. What happens, last 4 years it has underperformed. It has not given. In fact, the IPO was at a little more than 400 rupees. So even after 4.5 years, people are losing money. But you have to be at the right time to pick up the right stock at the right price. Now, going forward, I believe that it has to outperform. If you look at the steel industry in the country, in the last 4 years, after it came out with the IPO, the steel capacity has gone up by 33%. It caters to steel industry. And 2, last year it has got 540 hectares of a new mine in Maharashtra. And 3, if you look at September results or FY14 results, per year the operating profit now is around 500 crore, more than 500 crore, plus the interest income from the cash it holds, another little more than 300 crores. Put together, it's about 800 crore, 800 to 900 crore per annum. So apart from that, it already holds 3,000 crore of cash. Just imagine, in next 4 years, the market cap will be equivalent to the cash. And it doesn't happen in the market. The market has to value the cash because it's a hot cash. You can't discount the cash like investment holding. So, and plus, the government has proposed to set up another 100 million ton of steel capacity in the next 10 years. So if you have a 3 to 5 year time frame, I am very sure that this will be a multi-bagger.
All right. What's your target on this stock right now?
I have given conservatively 400. But if somebody wants to hold it for 4 to 5 years, I am pretty sure that it should touch anywhere around 700 to 800.
All right, so there's the target, and that's Choka's recommendation for this week. That's Moil. And remember, on this show, every time a guest gives us a recommendation, we track that recommendation every time he's back in the studio. Let's take a few questions. We have a question here from Vijayaran, who's written in that he has 185 shares of Oil India, which he bought at 517 rupees. And he also has 100 shares of Engineers India, which he bought at 144. Let's start with Oil India first. The stock ended the week at 589. Given all of the changes in the oil and gas sector, would you recommend he holds on to this one?
after oil prices crashed, this stock also corrected a lot. So I would suggest hold on, because globally it is believed that the crude oil prices bottomed out, because the research says that almost now 1/3 of shale gas is not profitable if Brent oil goes below $80. So I am very confident that oil price should rebound. Therefore, the person should hold on to the stock.
All right, hold on to that stock. Let's also talk about Engineers India. This is a stock that did remarkably well over the last year. What would you recommend he does going forward?
He should hold, and if you can afford, add more.
Add more.
Because if you see, again, it's a cash-rich company, and more than that, this is a beneficiary of oil price crash, because it caters mainly to oil and gas sector, particularly OMCs. Now the OMC's balance sheet will improve because of the oil price crash. Their subsidy burden will vanish, and therefore they would be able to spend more money on the capex program, and hence Engineers India would be the beneficiary. Moreover, Engineers India has got orders on hand already, which is 1.8 times the annual sales. So I should suggest that we should add more.
So Engineers India ended the week at 227. Add more at these levels or wait for a correction?
No, you can, because of the poor results, it has corrected a lot. It touched as high as 282 about a month back, and it has fallen to this level. So I would consider this as an opportunity to add.
All right, so add more of Engineers India if you're watching at home. It's time for us to take another quick break, but when we come back, we'll discuss stocks like Axis Bank and Tech Mahindra. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Choka is still with us, helping us figure out our long-term portfolios. And it's time for us to take a look at the portfolio of our lucky viewer. Choka, this week our lucky viewer is Baiju. He sent us the stocks in his portfolio. And it seems like he's picked a set of good stocks. The first on his list, 180 shares of Axis Bank, which he bought at 1163. Axis, of course, is doing so well. I know it's on the top of your list as well. Hold on to that stock.
Yeah, certainly. I mean, there is a lot more upside, for the whole market, and particularly for private banks like Axis Bank. So should hold on to the stock. But the only problem is that, the single stock he has given 39% exposure in the portfolio. If you add just Coal India to Axis, these two account for 55% of the portfolio. He was lucky this time, there was a bull run, but it is not good, to have that kind of exposure, aggressive exposure for just a couple of stocks. Tomorrow something goes wrong, his whole portfolio will sink. So therefore, I would suggest reduce the magnitude of exposure to Axis Bank.
Give me your cap. For anybody watching at home right now, it might not specifically be Axis Bank, but what should the cap be for every stock in my portfolio?
See, if somebody can take a little more aggressive risk, it should not be more than 8 stocks, 6 to 8. But the risk is associated. But if you are an average risk profile, it should be 10 to 12 stocks, which means you play with 8 to 12% maximum. So, but if you are too conservative, then 15 to 18 stocks. But certainly per stock, you have to play.
If you're too conservative, then use a mutual fund.
Yeah, it's like a sitting on the horse.
All right. So keep a cap of 8 to 12% on your stocks in your portfolio. Coal India, which he bought at 292 rupees. Hold on to Coal India as well.
Certainly, I see a great picture for Coal India in next 1 to 3 years. India cannot afford to import, coal the way we are importing, and Coal India has nearly 150 mines pending for environment clearance. I am sure the present government will do that within 2 to 3 years. This will create a big story in next 2 to 3 years.
All right, Glenmark, which he bought at 524 rupees. Hold on.
Hold on. I mean, it has been doing well, and rupee weakness should help.
In fact, here's the only sore spot in his portfolio. He has 150 shares of NMDC, which he bought at 135 rupees.
I would sell. It's a great company, a lot of cash. But what's happening in the iron ore business is really very scary. Now the people are talking of iron ore price crashing to $60 next year. There's a huge overcapacity. So it can fall further. Therefore, I would suggest shifting from NMDC to MOIL.
20 shares of RIL bought at 828 rupees. Hold on to RIL as well.
Hold on. I mean, it looks like a person likes mostly large cap, so therefore can hold on RIL.
Okay. Last stock, very interesting, and I'm going to spend some time on this. 12 shares of Tech Mahindra bought at 1728. Tech Mahindra also made an acquisition this week. How bullish are you on Tech Mahindra going forward, given the entire pack of the big four?
I mean, I respect the group. I like Tech Mahindra. Look at the way acquired Satyam and turned around. A lot of criticism when Tech Mahindra acquired Satyam, and I am pretty confident that even the recent acquisition would be a successful one. So I would suggest hold. In case it corrects, one can add also.
Do you want to add any other stock to his portfolio for where it stands right now?
Certainly, because as I said, this portfolio has only 6 stocks, so should add stocks like South Indian Bank, Karur Vysya. It doesn't have any exposure to FMCG, so to provide a risk mitigation to the portfolio, the person can add ITC as well.
All right, 3 stocks that you should be adding to your portfolio as well. Unfortunately, we've run out of time on this show, but if you'd like us to take a look at your portfolio, write to us. Email ID is at the bottom of your screen. Choka, it's always such a pleasure to have you in the studio. And if you have questions for Choka, you can get in touch with us. You can reach me personally on Twitter as well. Thank you so much for watching.